If you are a finance leader in a startup or scale up, insurance is one of those things that's so easy to ignore until a contact, an investor, or an incident forces you to deal with it quickly. So, in this video, I'm going to walk through all the different types of business insurance, what each one actually covers, which ones are legally required, and when startups should seriously consider adding them. And by the end of this video, you'll know which policies matter at each stage of your company so you don't overpay cover for what you don't need. So my name is Alysha Randall. I am a CFO and have been working with startups and scale-ups since 2006. And I also train new and aspiring CFOs. So if all of that sounds interesting to you, then please do click on the subscribe button below. Insurance is one of those topics, as I said, that is so easy to delay because it is so dry, and that's coming from an accountant. It feels boring, it feels expensive, and as until something goes wrong, it really doesn't feel urgent. But once you start hiring people, signing contracts, handling customer data, then insurance isn't really optional. It's absolutely part of running your business. So it's not whether you need insurance, but which policies actually matter and when. So I'm not trying to sell you insurance, but rather just help you understand what policies cover and when to make those sensible decisions. Two things that I want to say though. The first one is insurance is plan B or even plan C. It's not the plan to mitigate against risk. Ideally, there is a business plan to mitigate against risk or reduce your risk. And then if that fails, then insurance is plan B. So please don't see insurance as your plan A. It should just be what you can fall back on. The other piece of advice I'd strongly recommend is to speak to a really good insurance broker. They see claims every single day and can guide you far better than a comparison website or even this video. So I use insurance brokers for all of my clients and any company I worked for. I would never just go directly, as I said, to a comparison website or to an insurance company. Go to insurance broker, they can help you with what you need. So, what are the different types of startup insurance? The first one is employer's liability insurance. And I raise this one because this one is non-negotiable. It is legally required in many countries. So for the UK, it's legally required if you have employees and your minimum cover is 5 million. In the US, workers' compensation is a requirement in most states. In a lot of Europe, requirements can vary in continental Europe, but employee protection insurance is typically mandatory. Australia, I know workers' compensation insurance is also mandatory for employees. So if your company employs people, then this is one of the first policies you need. And what this covers is claims from employees who become ill or they become injured during work, and it includes legal defense costs and compensation. So it absolutely becomes essential as soon as you hire your first employee, or if you hire contractors who may legally count as employees because they work for you pretty much full time, or if you have interns or work experience staff. So, in other words, if you're working for this company, then you should be having this insurance. The second one is public liability insurance. This is pretty important for most businesses. It protects your company if a third party is injured on their property is damaged because of your business activities. So, for example, someone trips up in your office, or you damage a client's property during a meeting, or equipment causes an accident in an event. So, this becomes important if clients visit your office, if your team visits customer sites, if you attend trade shows or events, or if you sell physical products. So, it isn't often a legal requirement, but many landlords, enterprise customers, and even event organizers require it in contracts. So I will say both this insurance and the one coming up next, I have often had to provide the policy or at least a certificate, say, to the marketing team. They're trying to organize an event and they need to prove that they have these types of insurance. So the next insurance is also, you often have to prove this, and this is professional indemnity, or it's often called PI insurance. So if you have an advisory or a service business, so not product, then this insurance is quite important. So this one covers claims that your advice or your services or work cause financial loss to a client. So for example, incorrect financial advice, software errors that cause client losses, strategic advice that leads to commercial damage. So any consulting firms, accountings, lawyers, advisors, agencies, freelancers, SaaS platforms, all of these professional bodies then require PI. The fourth one I'd say that is becoming increasingly important if you have an online platform is cyber insurance. So cyber insurance, unfortunately, is probably going to be your most expensive insurance. I think because the risk of using cyber cover is much higher than any of the other ones. So cyber insurance covers losses resulting from cyber incidents such as data breaches, ransomware attacks, system outages, data theft. It may also cover legal costs, regulatory fines, and customer notification costs. So you can see how you would potentially use this insurance policy more often than the others because system outages and data breaches or data theft are becoming more and more common than, say, somebody slipping in an office and suing you. So this becomes particularly important for SaaS businesses, companies storing customer data. So you may not necessarily be a massive tech business, but if you are storing customer data, then you need to consider cyber insurance. Fintech or any data heavy startups, any business basically relying heavily on digital infrastructure, which is 99% of the companies these days. Because this is increasing globally, the policy is now becoming much more common. I'd say with most businesses that I work with, we have cyber insurance. The next one is D&O insurance, or directors and officers insurance. This one I would say all of my startups that I've ever worked with have D&O insurance. It basically protects company directors and executives from claims related to management decisions. So this would include claims from investors, regulators, employees, and shareholders. So this is very relevant once you raise an investment, so doing any equity investment. So after you've raised venture capital, when you're forming a board, when you're issuing equity to employees, investors would expect this to be in place. And if you have already done a fundraise, I would suggest you pull out your shareholder agreement and you will most likely find a D&O minimum requirement in there, usually 2, 5, or 10 million pounds in the UK. It's one of the first things I look at whenever I start with a new business is what is my requirements as far as a shareholder agreement is. And there is always a D&O requirement in there. So make sure you know what that is and that your D&O policy is as high as it is required to be. Number 6 is product liability insurance. This is essential for companies who are selling physical products. So this insurance protects your company if a product you sell causes injury or damage. So whether that's faulty electronics causing injury, a defective component, consumer product causing harm, if you manufacture, import, or distribute products, then this one is essential. So you definitely want to take a look at that one. Number 7 is property and equipment insurance. This is probably one that you're very familiar with because you probably have something like contents insurance personally, or even your car insurance. With a lot of businesses, this might be quite small because they just have a few laptops. But some businesses, particularly if you have stock inventory or manufacturing, then this might be a bit more expensive. So this is only really important once you have assets. Even if it's just a few laptops, that's fine. But it does cover things like computers, equipment, office furniture, machinery, stock and inventory. Where they say your office floods or it burns down or it gets robbed, then this insurance replaces those assets. It definitely becomes important when you have offices with a significant amount of equipment, hardware startups, or retail inventory-based businesses. It does certainly become important. Number 8 is business interruption insurance. Now, I would say that this one's a nice to have. Sometimes this is included in some of the policies above. If I think about policies I've looked at recently, this is certainly one that is included, but the policy is only for a smaller amount. When I've worked with startups who are getting quite sizable, then we have actually used it. And this is probably more common pre-COVID because everybody came into the office. So the question was always, what would we do if we couldn't get into the office? How would we run our business? So it's a good exercise to do without taking insurance. So what would you do if there was business interruptions? Basically, this insurance covers loss of income if your business can't operate due to unexpected event, such as a fire or flooding or bomb threat or whatever it is. But it is very common, obviously, if you have a physical retail business, manufacturing companies, or business dependent on premises. Now, a lot of startups don't have that. They have a lot of remote working, like a WeWork type office. And so it's probably not really relevant, but if you have to be in a physical location in order to run the company, then this may be one you may consider to be quite important. And then the final one is management liability or employment practices insurance. This is becoming more common, but again, it depends on the level of risk that you want to take. This type of cover protects you against claims from employees around unfair dismissal, discrimination, workplace harassment. As your companies grow, employment disputes do become more common. So this insurance type is becoming more popular, but it's not essential, but it's up to you about whether you want to keep it or not. So when startups usually add these policies, so a simple way to think about it is very early stage, you would probably have professional indemnity if you're a service business and public liability. As soon as you hire your first employees, which most of the time is very early stage as well, employer's liability would be next because it's mandatory in many countries. As soon as you're handling customer data, then cyber insurance would probably kick in. Raising investment, D&O insurance, or if you have quite a few shareholders, then D&O becomes more interesting. And then if you're selling products, then product liability. So that's kind of how I think about it. Why is a broker worth it? So insurance landscape is complex. Policies can overlap, exclusions matter, startups can underestimate their risk. So a good broker can identify what cover you actually need. They can avoid duplicate policies because, as I mentioned, some policies kind of include lots of things. And unless you have the time to go through the fine print, you may not know that. Ensure you meet contractual requirements. So if you're in the UK and you have a subsidiary in the US or another subsidiary in Spain, a broker will help you ensure that you have the minimum requirements. And they'll also help you if a claim happens. So they understand the difference between, say, UK, US, continental European, or any other country insurance expectations. So that's really important for your startup, particularly if they operate internationally. So insurance shouldn't be an afterthought if something goes wrong. Instead, as I said, it's your plan B from protecting the business from a handful of events that could genuinely destroy the business. So most companies don't need every policy immediately, but understanding which type of cover you need will help you introduce it at the right stage. And as I said, if you're unsure, speak to a broker before guessing. It's just one of those areas where a small amount of guidance can really prevent an expensive mistake. So if you would like to be a skilled and confident finance leader within the next 12 months, then I've got a 3-step plan for you. The first one is subscribe to this channel where you get weekly insights such as today. The second one is take a look at financial leadership fundamentals, how to become a CFO in a startup or scale up. And then finally, if you want additional support from me directly, then take a look at our FLF program where we have live Q&A sessions where I can help you with your role directly. So thanks so much for watching and I'll see you next week. Cheers.